Hello and welcome to the Loan Officer Wealth Podcast. I'm your host, Chris Johnstone, and I have an incredible offer for you today. What we've done is we've taken the 10 most profitable methods to grow your mortgage business that we have learned from interviewing the producers on this podcast, many of whom are doing over $100 million in volume per year. And we've packaged them together into a condensed 45-minute training where you get to learn the 10 most successful and profitable activities that you should be running in your mortgage business. Then we show you how to automate those processes with people and systems so that they run and continue to produce loan applications and new partners that want to send you business pre-booked into your calendar without you having to do any cold calls or chasing or really any work. It's a blueprint for you to be able to produce more in your business while actually working less. And you can go get that training today for free at chriswebinar.com. That's chriswebinar.com. So make sure you head over there today, grab that training for free, and make sure that you watch it, because the sooner you get started on implementing these strategies, the sooner you can see results and continue to grow your mortgage business. Thank you again for being here with us for this episode, and enjoy another one on the Loan Officer Wealth Podcast. Hello, everybody, and welcome back to the Loan Officer Wealth Podcast. I'm joined here by Michael McAllister from Empower LO. Michael, thank you so much for being on the show.
Thank you for having me, Chris. It's a pleasure.
Right on. Just before we went live, you were explaining the gorgeous background that you've got there. Looks like the beach and the sun. So thank you for taking the time to join us. You're at an event right now, right?
Yeah, I'm actually, I wish I was better at setting up the backdrop, but I can lift up my iPad here. I'm at the Fairmont Scottsdale Princess for Housing Wire Annual in Scottsdale, Arizona. It's been an awesome event so far. The place is freaking beautiful. That's the number one thing they got going. They picked the best venue for this, I swear. But yeah, having a good time out there.
That is amazing. Well, so you and I have known of each other for many years because we are both involved in generating online leads for professionals in the mortgage industry. And I'm super excited to talk about direct to consumer lead generation with you. So if it's cool with you, let's dive right in.
Yeah, same here. Let's go.
So one of the first questions that I always get when people are asking me about traffic is, where do I invest my money? Is it TikTok? Is it YouTube? Is it Facebook? Is it Instagram? Is it Google? So what's your opinion on traffic source and the quality of where loan officers should be investing their dollars right now?
Yeah, I mean, I first off, I think that there are so many components to a marketing funnel or like a marketing campaign that go beyond where you're getting your traffic from, and really like components to how you want your business to look, or like what you know what I mean. Like if you're just asking where I want to invest my money, if you're literally looking for a machine that you exchange dollars for closed deals, and you don't want to do any work, like I guess try and find a Zillow zip code, maybe, if those are still out, still available. From what I understand, they're pulling a lot of those off. But then there's so many levels on the spectrum in between there, and like grinding out Facebook leads at $1 or $2 a pop, and home search Facebook leads, and just playing the database, the numbers game, right? So Google searches, like, basically I want to be where my expertise is at. I want to be where people are searching for what I'm providing. So YouTube, I am not experienced with video at all. However, YouTube is just as much of a search engine these days as Google. And so I'll even give a plug there for YouTube, despite the fact that we couldn't help anybody with it. But at the end of the day, it's about intent, and it's about being where people are searching, as far as from what I found to be the best balance of spending money and willing to put in some work to convert some leads. At the end of the day, look at where the best players are at: Quicken Loans, Veterans United, Lending Tree, Bankrate. You look at any of those companies, and the number one source that they're getting their traffic from is going to be search engines. And so, just follow the big guys, and typically you won't be led astray.
Yeah, absolutely. I saw an interesting stat the other day. 87% of the traffic that goes to Zillow.com originates from Google.com first. Like, people aren't even going to the search bar and typing in Zillow.com. They go to Google, type in Zillow, and then they go to Zillow through Google, which
Wow.
is incredible.
Yeah, yeah, that is crazy. That is crazy. And if you look at, so there's a web tool, SimilarWeb. I don't know if you've ever used SimilarWeb before, but if you go to Zillow and you click on SimilarWeb, that from there it says the number one traffic source is direct. But what people like don't think about in that case is a lot of the times that's going to refer to the people that have the app on the phone that are going to Zillow through the app on their phone, right? And no matter what, if it's coming from a web browser, it sounds like people are still starting with that search engine. That's crazy. That's crazy.
Yeah, it's not, well, if you want something, you Google it.
Yep.
So now talk to me about, so for those of our listeners that are a little bit more in depth into advertising, when you say Google ads, it opens up a whole spectrum of opportunities for you because there's search-based ads, there's the content network. So where do you like to generate the mortgage leads from? Where do you find that you get the best quality from as far as the type of network?
Yeah, so all of our campaigns are 100% search, and
Nice.
then we even remove search partners, Google search partners. Like they push it, they penalize us for it in our like recommendation score, whatever that they base our like partnership on or whatever. But at the end of the day, like we've just seen that if it's not Google and it's one of these off-brand search engine, it's probably not the type of person you want going into your funnel anyway. So we hang out strictly search, and no search partners included.
Got it. Okay. And I always get this question. So when we were running Google Ads on a much larger scale, we're a lot more niche. Well, I would always get, hey, Google reached out to me. They gave me a rep, and I got on the call with them, and they said the campaigns were all janky, and I need to spend more money. So what do you tell your clients when the Google expert gets on the phone with them from Google?
So we actually, I mean, we've been doing this like 5 years now, and we're up to like 140 grand a month in managed spend. We have dealt with this we dealt with this for a long time, probably the first 3 years. It took a lot of fighting to get Google to stop reaching out to our clients. I mean, I think they have a setting somewhere, but even when that setting, even when the setting is toggled inside of each account that like don't reach out to me or whatever, we still ended up getting our phones blown up as the MCC owner offering to help on behalf of those. And it's just a huge distraction. And I will say Google, it seems like they've gotten a lot more connected to like a lead, like a direct response lead gen goal. Whereas 5 years ago, it was like I couldn't use anything automated from Google. It would mess up the campaigns entirely. I mean, I was manual CPC in all of my accounts, like managing each keyword individually. Now we use mostly automated bid strategies because Google has gotten way better at matching like the intent of their searchers with the intent of the advertiser, and that's just been great for everybody. So short story long, short answer long, right? My clients don't like, luckily don't get those calls anymore. And if they do, I feel like we've been around long enough that we're able to say, hey, look, like, trust the results, trust the numbers. You signed up based on this. We're delivering this. Like, don't rock the boat, right?
Yeah, absolutely. And spending more money on your campaign is not always the answer
Yeah,
that you're
right.
looking for.
That's 75% of the recommendations is increase your budget, right? You see a lot less of those, I will say, when you use maximize conversions, when you're using a fully automated bidding strategy. Basically, you see a lot less of that because what you're telling them is like, maximize my budget, get as much, and that's what didn't exist before. That's what Google didn't understand 5 years ago when we would go in and manage these campaigns, is like, look, more is not always better. Top of the page for every word is not good. That
Yeah.
that means you're overspending a lot. And they didn't understand that. Like, I want as many leads as I can for this amount of budget. Their bidding strategies didn't catch on to that until 2 or 3 years ago. So it's gotten a lot better for sure.
Absolutely. So when you're running your campaign specifically in the mortgage space, are you finding it's better to be niche specific and to go after, let's say, veterans or, homes for heroes type leads, or, dentists and doctors and lawyers, and trying to get that higher income bracket? Or is it more, let's go general consumer and try and get Fannie and Freddie leads through? Like, what do you find is the greatest strategy to going to paid ads to generate a mortgage lead?
Yeah, I mean, the way I look at this is like as a like when it comes to search, you have to think search behavior. Who's on the other end? Who's searching, and what are they searching for? Like, does a doctor search for home loan advice any different than the average person? Probably not.
That's right.
Probably not, right? And so the niche stuff is a lot harder because there's a lot of advertisers that think the same way by default, and that's where they're all fighting over this super low search volume, which drives the cost of these bids up, which makes it so that you can't generate leads at a cost that's scalable, or for an advertiser or for a marketer a cost that like you can sell to your LOs as being scalable.
Right.
Um, and so we find that the general population search is better. Now, you used to be able to do a lot of audience segmentation in addition to that, just like you were able to do with Facebook. We never got into that because, I mean, it's illegal. Like, you can't target by income. You can't run ads in the mortgage space targeting by income, or, zip code, right? There's all these different layers of it, because of Equal Credit Opportunity Act in the states, that like you just can't do that. That's why Facebook got their hands slapped, and why all of their targeting metrics have gone down and down and down and down. So we didn't want to become dependent on that. The doctors thing, like being able to target medical professionals as an audience segmentation, I don't think that's going away. So basically what you would do is you would be targeting all the same searches, but only for that audience, right?
Yep.
That's an interesting idea. We haven't explored that. Haven't played with that at all. I think that could potentially be useful, but we found a lot, like at the end of the day, they're not searching for anything different. So
Right.
unless you have something really enticing to offer that individual, and you think that they're going to respond differently because they're a doctor, it's you're chasing a wormhole for sure.
Yeah, absolutely. So we've done, traffic source, niche, keyword selection, I guess you could call it, as far as like it's still okay to just go out after your standard mortgage lead. And you touched on the next critical component in putting together a marketing offer, which is where I feel most loan officers can make the most dramatic impact with all of their advertising, which is the offer. Like, what are you actually putting out into the marketplace that's going to attract the type of consumer that you want to work with from online ads? And then how do you use that offer to get away from the people that can't qualify through online marketing, which tends to be a major pain point for a lot of the online leads that come in? So what are you seeing as different or unique offers that you're putting into the marketplace that are attracting the right type of consumer through the funnel?
Yeah, I mean, I gotta be honest with you. Like, have not like we haven't had a lot of luck addressing this at that point in the funnel.
Mm-hmm.
Like,
Yeah.
at the end of the day, I came up with this concept a few years ago called like least common denominator market, like a market in the marketing space, right? And so what that means to me is, like, if you're advertising in the same space as some of the most recognized names in any
Yeah.
brand, right? Quicken Loans, Zillow Home Loans, Lending Tree, Lower My Bills, which is owned by Quicken Loans, a Mortgage Research Center, which is owned by Veterans United, right? Like, if you're running against these guys and they're willing to go out there and say, hey, we'll tell you how much house you can afford. If they're willing to do that, and they make it seem like there's no strings attached to that, if you put something out there that is anything less valuable in their eyes, whether or not it's true that you can actually do that for them,
Mm-hmm.
like, if you put anything out there that's less valuable than that in their eyes, you have a lower probability of being able to convert that, or being able to get
Huh.
them to actually go through your funnel. Like, your conversion rates will spike, your cost per lead will spike, etc. So we honestly, like, it's interesting that you bring this up because it's good. Like, this is good, I think, for your listeners is like, if you are trying to target a specific segment of the market and you have these standards of like the type of client that you want to work with, this type of lead generation is not for you, or at least not the way I do it, not the way
Right.
we do it. Right. Like our clients are pissed off that there's this whole segment of the market that's being served by really shitty consumer direct like lenders basically, and our clients like want to take that piece of the pie back, which means they're willing to deal with those same deals that those other clients are dealing with, and we have a lot of systems in place to make sure that they minimize their time with ones that aren't willing to invest on their side and get to the finish line, right? And then we also have systems in place to identify the ones that come through that are like your engineer types that are a 740 plus borrower, you know, 500,000 a year. They just don't want to talk to somebody face to face before they do some research online, right?
Right.
Like, so we have systems and processes in place to identify those, extrapolate them in the funnel, and treat them differently so that we can convert them. But at the end of the day, if you're not willing to work with that, like the average internet lead buyer, like you're probably not a culture fit to work with our company anyways. We're in this shit to help people, you know what I mean?
Right. Exactly. Yeah, that makes total sense.
I'm
And
sorry for cursing, by the way. I don't know. It's hard. I try to filter it every time. Every podcast I'm on, there's this little like, hey, I'm sorry. Like bleep it if you want to. It's okay. I'm sorry.
the passion is coming through, and I think that resonates. So I think we're all good. To our listeners, we've all got our we're all over 18 here, I think. So we're
Yeah.
all good. So in the offer, and I'll just share this with our audience and with you and take it for what it is, but in our Google ads that we're running, and this translates across to our Facebook and Instagram ads. So I'm a partner in a mortgage company in Canada. It's my dad's company, and we've been doing, lending. And a lot of what we do is private lending, but we do also consumer direct and just standard light stuff. And when we combined what I call the hub and spoke from our product delivery, so what we ended up doing, and I won't take too much time because I want to dig in. You've got so much value for us. But our hub and spoke strategy is every new application that we bring into the business, we ask them. This used to be called the page 5, and I'm not entirely sure where it came from, but all credit to whoever it is that created this. But this was passed down to me through a number of different coaches and consultants. But when you take an application from somebody, on the final page of the application, or add this to your online application, whatever tool it is that you're using, ask them, who's your lawyer? Who's your title company? Who's your insurance professional? Do you have a wealth manager? Are you working with an accounting firm? And you get all of the names of all of the potential referral partners that you can be doing business with. And then you call all of those professionals on the other side of the table and say, hey, we have a mutual client. We'd like to see if we're a good fit together, because we're constantly pruning, because we want to refer the best that exists in our local marketplace for all of our customers. Do you have 15 minutes for a conversation? This is a great way to set up those referral relationships. So we named it the hub and spoke so that we could explain it to loan officers when they were coming in and buying our product. And it's like, hey, we will make those phone calls for you. Like, you just get us the names, we'll make the phone calls, we have the scripts, we'll do all that. But then we took it all the way back to the advertisements, and we were like, wait a minute. Most people in the mortgage industry aren't doing this. So we copied the same offer that the big multi-conglomerates are using. And it wasn't just, we can let you know what your rate and payment is going to be. It's, we're going to let you know what your rate and payment is going to be. And we can introduce you to our entire network of insurance, wealth management, tax advisory, and accounting services. So not only are you going to get the best mortgage, but we're also going to make sure that you're walking into your new home with the best financial possible situation for you and your family, so you're set for long-term growth. And so we actually enhanced the offer and went above what was in the marketplace at current by offering all of the services by referral partners. And then what that did was it then gave us this pathway to all these referral partners in our local marketplace, because we didn't have to get a deal to have somebody that we referred out. Now we just had to generate a lead, and we could refer a lead to 6 or 7 other professionals that could then start sending us referrals.
Oh.
So take that for what it may be on
Yeah.
your offers, and for all of our listeners.
Can I ask a piggyback question on that?
100%.
Because when I think about that, a lot of structuring an offer is about like obviously who your target audience is, right? And so
Hmm.
when you offer like that level of service, I'm assuming that like the average Joe that like last time they checked Credit Karma, their score was a 570 or whatever. They're looking at this like, wow, this is a big commitment. I don't want to do this.
Hmm.
Is that fair? Do you feel like you get a better average quality lead through those funnels than you would if you were to just say find out how much house you can afford?
Totally. Yeah. And you hit the nail on the head. Definitely decreases conversion. So if we're looking at landing page conversion, those pages were far outperformed by the other offers. So the cost per lead was higher, but a better quality lead coming through the funnel. Still lots of garbage. But
Right.
if you look at, the bottom 5% or 6% is really the high quality leads that we're working with. We may have
Yeah.
bumped that by 1 or 2 percentage points with the
Right.
offer, which at the end of a funnel can make a pretty significant difference.
Yeah. Yeah. Well, and then as you said earlier, I don't want to distract from that point, which is the biggest point, which is the higher point of leverage with that lead, right?
Yeah. But again, coming from our side of the table, it's hard to go back to a client and be like, okay, you're getting leads at 15. These ones are going to be 25.
Yeah.
It's sometimes
That's a partnership model at that point. I mean, there's got
that's
to be a
right.
lot of trust there, right? Versus a lot of LOs want to come into something that's as close to possible as ready to go out of the box,
Yeah, absolutely.
and that's tough to sell to that customer. But my wheels are turning around customers of mine that we've worked with long enough and spent enough money that it would be worth it for them to look at something like that.
Yeah. And and I love that you said that partnership model. So in working with your clients, do you recommend that your clients send an online application to a lead before they've spoken to them? Or do you recommend you speak to the client and then you send the online application?
I'm going to answer this, and I'm not even going to ask for your answer first, but I want to ask. Can I get background on why the such specific question?
So we had previously in a lot of our funnels, we would pair them with an automation system and it would send emails and text messages and ringless voicemails. But we paired it with our concierge service, which would make the calls, vet the people. And a lot of our clients would be like, why don't you just text them the application? And I'm not going to vet any of the leads. I'm just going to send them their online application. If an app comes in, then I'll work the lead, but I'm not working leads. That's part of the reason why we created the concierge service, was to get over that hurdle of people not wanting to talk to the leads and just send them an online application.
Crazy. It's crazy. So okay, um, this is a great question, and one that we like have visited so much over the years. For like my personal background in the mortgage space had an impact on this as well. Um, we have found that the number one like highest performing like best average application and highest volume of application is talking to somebody on the phone
Yes.
before whether you use an online app or you take the 1003 over the phone makes no difference, but you have to have that quality intake call up front
Yep.
where you're digging a little bit, you're building rapport, you're establishing yourself as an expert, and you're honestly in like gating the information that you're giving to them based on getting levels of commitment throughout the process. Like if you don't do it, Quicken Loans, the $15 an hour call center rep in the middle of the country, like they're going to be a better skilled, like more skilled salesperson than you, and they're going to do it. So
Yes.
the caveat to that, our highest performing customer and the customer that has gotten the best ROI with our system, hands down, maybe not as a percentage, but has made the most money with our system and spends the most money on ad spend with us. In fact, I was down here 2 weeks ago in Tucson with a couple of our teammates, hanging out with them for a few days. It's something that we've done now a couple years in a row. They came up there, we came down there. He does not do that at all. He has a dialer that will call after they've gotten the commitment and sent the application,
Hmm.
but he does not do like any skilled phone call prior to receiving the application. Now he knows that he converts what we call the low hanging fruit. He does really, really good with borrowers with a lot of hair on their situation. Like they are
Right.
so creative. They are some of the most helpful, like genuine, wholehearted people I know. But he knows he's leaving so much money on the table because I tell him, look, that 740 borrower rocking his New Balances that just mowed his lawn on a Wednesday morning, like that that borrower is not going to submit an online application without having talked to you on the phone first. They
That's
are
right.
like, just put yourself in their shoes and their New Balances, and you're not like, or your Monarchs, Air Monarchs, whatever whichever cliche you want to use there. Like, they are not going to submit an app without talking to that person on the phone. And so you're right. I have somebody that's successful. I've had people that are successful with it, but those also have to be the clients that are willing to work with a lower echelon clientele, because most people that have a decent FICO have not done so by submitting a loan application to the first person that texts them a link to their loan application.
Fantastic answer. And I love that it comes back to choice, which, as the market shifts, there's a lot of choices being made in the mortgage market right now. Like, are you really willing to put in, because we're not coming, the sky isn't falling. We're just coming back to normal. Like, the 2 years previous to this were not normal. Loans were just falling out of the sky. Like, we're just back to normal now. So you get to decide how much effort you want to put in. Do you want to call the leads and vet the leads and get more money? Or are you willing to do the online app side of things? And there's no wrong answer, but it's important, I think, for everybody here to be educated on what they're actually choosing. Because I don't think a lot of people understand that it's a choice on how they work their leads.
100%. And it's like, if you're somebody that thinks that deals are harder to come by right now, then you just have to be willing to do more work higher up in the funnel.
That's
Like
right.
there are, like, no matter what the economy looks like people are going to eat. Like, there are going to be loan officers that eat just fine, right? And I think part of the problem that we have is, you're exactly like, we're coming off of 2 years of loan officers didn't even have time to spend the money they were making.
Yeah.
Like, you know what I mean? And so that's a problem too for the mortgage industry, because you got a lot of loan officers. We talk to loan officers all the time that are like, yeah, I think I'm going to hang up my license for a couple of years. We're like, what? Like, this is your identity that you're just disassociating from because it's going to get tough you know what I mean? Like, weird, crazy. I mean, obviously not everybody identifies as a loan officer, right? But I just get that passionate about my work, so it blows my mind to hear that. But it speaks to exactly what you said is, like, loan officers right now are making the choice, like, do I really want to work? Do I really want to work right now? Or am I just going to like ride on what I've done over the last couple of years?
Yeah, it's so I got to see a fantastic training with Darren Hardy, who used to be the publisher of Success Magazine. Phenomenal individual. So when COVID first happened, Gary Morris, who's the CEO of Dominion Lending Centers in Canada, which is the largest network in Canada, and when he was growing it, it was the fastest growing network until it was the biggest. So he ran this special training with Darren Hardy. And Darren came on and he was like, let's look at these 5 massive brands that you think of today and just think are like landmark brands, never going anywhere. And he took it all the way back to either a previous recession or a previous hit to their particular marketplace, where exactly what's happening in the mortgage market right now was happening. Things went from being like crazy good just back to normal. There was a contraction of some type, and every single one of these companies doubled down on marketing, they doubled down on people and staff, and they took the market. And I can tell you right now, a tremendous amount of purchase business market share was just left on the vine while the industry was capturing refinances. But that market still exists right now. And if you think about relationships with realtors, and you're providing leads that can be turned into opportunities for realtors that can open up relationships. With our concierge product, we can help them with their database marketing. We can help realtors with all of these wonderful things. Realtors didn't want to talk to you in the last 2 years because they were just as busy as we were in the mortgage industry. But now they're sitting at their desk, hands open, willing to help, willing to listen to you, willing to try the strategies, willing to open that relationship up, which you can lock down for potentially a lifetime. Like, yes,
Yeah.
a lot of them are fickle, but you do it right and find consistent value to that relationship, And this is the time to get the market share. And I think it's the exact same with leads as well, because I know everybody wants the conversion in the first 60 days. We've we've done this long enough. It's like, what low-hanging fruit can I pull? But where I think a lot of people miss out is on all of the opportunity that you're generating for your clients right now when rates start to come back down. Because there's a large part of that database they're going to buy. They're buyers. They want into the marketplace for some strange reason, freaking YouTube. They think they can time the market. So as soon as those rates start to drop down, that database is quite literally money. You've just got money sitting in that database of all those leads that are ready to go. I mean, loan officers out there, if right now you're not calling the leads that you pre-approved over the last 2 years that weren't able to get into the housing market that now have an opportunity to do so, it's just low-hanging fruit. So I love that lead generation side of things and the database marketing. So Michael, you've been so generous with your time, but I would like to just extend a little bit more into follow-up. So you do a phenomenal job with lead gen, and I know that you do a great job with lead follow-up. So what does the experience look like for a lead after they opt in? How are you converting the most amount of those leads for your clients?
Yeah, I mean, the first thing is kind of like is obvious, almost cliche at this point. Is like you have to automate that initial follow up.
Yeah, 100%.
Ringless voicemails used to be a part of our like suite for that. We kind of discourage it these days. It just seems like there's been enough of that people immediately associate that with spam. Not to mention, like, I don't even listen to my voicemails. If I don't recognize the number, I'll look at like the little like text translation and look for a company name or something that I recognize. And if I don't, boom, delete it. And I have found over my like short career so far that I'm typically a pretty good measure. My behavior is typically a pretty good measure of like average consumer behavior. I'm pretty basic, I guess is what you could say, right? And so we automate follow up with text and email. And then from there, that's just to identify those people that instantly are going to tell you, screw off, you've got the wrong number, not interested, you're a scammer or whatever, right? Like you're going to get weird stuff like that.
I didn't fill out the form.
I don't know what you're talking about. Like, my friend must have pranked me. Like, interesting prank, but I guess that's what I would do to another loan officer that I was trying to prank. I know enough. Let's just submit a Zillow lead on this. Yeah, like, let's clog up his phone lines for a while.
Not a recommendation, listeners.
But yeah, so no manual like, we don't recommend any calling follow up in this step. Like, we want to identify our automated campaigns. Like, you can write automated campaigns that have a 60% response rate. Mm-hmm. And then of those, like, we've been able to use like the way that we set up tracking throughout the funnel to dial in our lead quality to the point where we have what we call a quality engagement rate that we measure as well, which is, yes, I did intend to inquire. Yes, you do have the right contact information. Okay. And so that quality engagement rate, we're seeing 40 to 45% will identify themselves out of the gates as like, yes, I that was me, and I have some questions. Like, is that
45% of the 60% or 45% overall?
Overall.
Cool.
So
awesome.
So like 20% of the responses. It used to be more like 50-50. Like, our numbers used to be 40% response rate and 25% quality engagement rate. Yep. But I don't know. Like, I mean, we're constantly tweaking stuff, and we aren't very scientific about those tweaks. And so I don't want to take credit for stuff where, the industry as a whole has shifted a direction. I don't know. But over time, through our tweaks and through like whatever, we've gotten our response rate up to 50 to 60%. And then that quality engagement rate to 40 to 45%, obviously lower based on the response rate. And so then from there, that's when it starts. Like, that's when the game starts, that actually involves the loan officer, or in your case, like a lead concierge. And our strategy is basically, we're trying to get them, we're trying to ask a few qualifying questions up front, both as engagement bait to get them like some, reciprocity going. But also to determine, like, if I have criteria if I have criteria in my head of somebody that I don't want to get on the phone with, I don't want to spend time with, you're going to uncover that in those first couple questions, right? But then we're going for a phone call as casual as possible. Hey, when do you, all this looks great. got a few more questions that are probably better over the phone. When do you have 10 to 15 minutes to chat, right? Uh, and then from there, it's a game. It's basically a game of trying to get the app over the phone if that's what you're doing,
Yep.
or you're qualifying, property, income, credit, asset type questions. You're asking those in like a intake call format with the intent of sending them a link afterwards. Hey, and this was me. This is what I was saying earlier, where like this is funny ground for me because I used to argue with loan officers over whether or not I should argue. Ryan Chapman, I don't know if you know Ryan, but he's a buddy of
Yes.
mine out in Chicago. And like I used to go back and forth with him because he's like, dude, we're mortgage originators. Like our number one job is to take a damn application. What are you
Yep.
doing? Sending them to an online application. And there's so much truth behind that. And I've watched LOs close way better than I did when I was converting leads, but I was like, I'm not a data entry. I'm not a data entry guy. Like I'm going to get on the phone. I'm going to take the information. I wasn't experienced enough as an LO to have that napkin 1003 that I was just so good at pulling all that specific information. I was always going to have to go back for more anyways. So it
Yep.
was like, I'm going to find out like how seriously I should take these guys. And then I'll send them to my online app to finish it.
That's awesome. That's super cool. One small tweak again for our listeners and to share is what we've discovered is that if you're using a process like Flowify or you have some type of like really good online app, what we'll do in that initial conversation is we'll say, okay, that's giving me enough information to start your application and I've saved it inside your file. And I'm going to send you a link so that you can continue it. So rather than we need you to submit a mortgage application, it's you've started the mortgage application here with me now, and it's going to be more convenient for you to finish this process, and I'm going to send you the link that you need to do it. And that mental shift in the client's mind to I've already made that first step make the amount of people that actually go and complete the online application increases just as a result of them feeling like they've already started the commitment path down that road. And that came from something I learned from Carl White, another really good friend of mine. He's got a great statistics out there, and it's over 70% of people will fund their loan with the first loan officer that they speak to. So if you take a look at like all of the automations and all of the crazy stuff we do, if you can just be the first person on the phone and just get that first foot in the door of you've started your application with me and I'm going to send you the link to finish it, it makes, again, from the very bottom of the funnel of how many closed deals, that can
Yeah,
be a huge leverage point for you in your
I bet.
conversion.
I bet. And so I'm curious, would you recommend somebody use scripting like that, even if they like, don't have the ability to pre-fill out any of that information, like within their process? They just say it, express it the same way, and they just send them the link. I mean, obviously they don't understand on their side the difference. So
Exactly. Yeah. Or
okay,
it could be
cool.
something is like, I've taken that, I've noted it here on your file. I'm going to send you the full application so that you can fill it out.
Heck
But
yeah.
Need. I've got you here. Don't worry. We're going to take care of
Right on. Do you have any classes for marketers I can sign up for, Chris?
you.
I need
uh,
a mastermind, maybe. I'm liking this. I'm getting more value than you, I feel like, from this. I appreciate you.
oh, hardly. Well, I appreciate you being on the show. And I think I just want to say something to our audience, but also to you, Michael. Like, if you're in the mortgage space, you know that Michael and I could be considered competitors. And for him to be as generous with his time and to come on the podcast and to share what you've got, I mean, Michael, it's a tremendous testament to how well your systems work and how healthy your company is and how big of an individual you are. So thank you for being on the show. I really appreciate it.
Yeah, I mean, I appreciate you, and like it's the same back to you. I mean, it's funny that you bring that up because coming into this call, I had reached out previously to your assistant, I think, to try and set up something ahead of time to have like that the elephant in the room conversation ahead of time, and didn't get the opportunity to. So I was like, in the back of my mind, I'm like, all right, well, if he seems like he's just trying to steal my secrets, like I got to dial it back. But as soon as we got on the phone, I saw you and I do business very similarly. You very obviously have an abundance mindset, and like I said, I just appreciate being on, and I hope we get the opportunity to work together in the future.
Awesome. So people that are listening to this and they're thinking Google Ads, I want leads, I love that funnel. How do people reach out to you? How do people find more about Empower LO?
Yeah. So the Google Ads side, right? You're going to be able to find the most information empowerfunnels.com. We have not yet migrated all of our like content into one conjoined site for the brand. But you can find information about both of, both the Google Ads, the mortgage lead generation, and the software platform that we offer support. Go High
Nice.
Level, if you haven't heard of it, we didn't even touch on that topic.
Yeah.
But we run our own white labeled instance of Go High Level and support loan officers as they leverage the crazy capacity of that system in their business. And you can find information about that and the lead generation system at empowerlo.com. So whichever sticks out in your head now, empowerlo.com, empowerfunnels.com. I'll always own both domains and I'll redirect them where I want to. So you just schedule a demo on the landing page if you're looking for, or schedule a demo if you're looking for the lead generation. If you just want to try out the software and see how we do business, you can claim a 14-day free trial at empowerlo.com. Just tell us, make sure you tell us that Chris sent you.
Yeah, that's awesome. And again, Michael, thank you so much for being on the show. All of that information will be in the show notes. And to all of our listeners, if you found value in this episode, don't forget to head on over to iTunes, hit us with a 5-star rating and review on the podcast. It helps us get more incredible guests like Michael on the show. If you're seeing this on social, please like, comment, and share. Let us know what you thought about the content, what your number one takeaway was. And we're all in this together. So make sure that you share this amongst your contacts. And I will see you all on the next episode. Hey, it's Chris. Thank you so much for listening, and I hope that you enjoyed our guest today on the podcast. This is a reminder that we have just finished taking the greatest lessons from all of our guests and packaging them together into a brief online video presentation that's going to teach you the 10 most profitable ways to grow your mortgage business. And then we show you how to automate those processes in your business with people and systems so that you get the results without you having to do the work every day. This is quite literally a blueprint so that you walk into your mortgage business every day with pre-booked appointments with borrowers that want to meet with you and referral partners that want to send you business, so that you are spending your time inside your mortgage business on the highest dollar per hour activities, and you truly become the executive of your business, a true business owner, rather than just somebody who's going to a job every day and making a wage on the way through. This is an absolutely incredibly powerful training for you, and I cannot wait for you to experience it. So head on over to chriswebinar.com. That's chriswebinar.com to get that free training today. Now, if you could do me another favor, if you enjoyed this episode, please head on over to iTunes, search the Loan Officer Wealth Podcast, and give us a 5-star rating and review, really on any podcast platform that you're watching this on. That just 30 seconds of your time goes to help another loan officer in the industry discover this information and really help put their life and their business on track for more success. We are all in this together, and there is more than enough for all of us in the industry. So I would love if you left us that 5-star rating and review. Don't forget to stay tuned for our next episode, and I'll see you then.